Hello guys, I hope you're still okay that side. Well, one of you asked me this question today about an hour ago. So the question goes like this. So let's say a week breaks a bullish trend. So we'll try and visualize that. So you are talking about a bullish trend, right? Which means it's something like this. You're saying a bullish trend line. Okay, let's put a trend line. So we have a bullish trend line that is saying a week closed, broke it. Okay, let's try and put that. It came back, and maybe it comes like this, and then we have the candlestick there that went out like that. That went out like that, ne? And you're saying the week close, it breaks a bullish trend line. So I'm assuming, because remember, when you're saying breaking a trend line, we need to have the candlestick outside there. It mustn't touch the trend line for us to say. For us to say it has broken the trend line, it needs to be away from the trend line. And then it moves further down and passes the previous support. Okay, let's say we had support there. Maybe we were planning on buying from that, but we never got any chance. We had a support, so now we can see we broke the trend line, like you said. Let me just do it this way. You said breaks bullish trend line, and then it passes the support, which is what we're seeing here on our diagram, and then it rallies and closes above the same trend line. No, it's impossible. It's impossible, because you are, it's contradiction there. What do I mean by that? Because remember, the same bar that gave you that week that broke the trend line can't go up and close above the trend line. Why? Because if this is the bar that you're talking about that gave us the week, if it goes up and close up there and touch the trend line, then it means the trend line is not broken. Because remember, we said for us the trend line, for the trend line to be considered broken, we need to have a candlestick far away from the trend line and not touching the trend line. So in this case, it's impossible that the candlestick that gave you the break of a trend line can go up and close above the trend line. I see what you're trying to do here, but it's fine. I'll still explain it. But the way you put it, it's wrong, because let's say I'll put it this way. We have the candlestick outside, we broke the trend line and we broke the support, and then maybe let's say the next candlestick is the one that goes up like that, because it's impossible that this one can go up. If it goes up, then we haven't broken the trend line. If it goes up and touches the trend line, then we haven't broken it. Then you are saying, is that support that was passed no longer valid? Yes, that one, it's no longer valid. Why? Because I always tell you that on your chart, the zones that you can have, it's support and resistance. Then when you're going up, or whether you're going up or you're going down, you are going to be breaking supports or you're going to be breaking resistance. So in this case, what is it that we broke? The price went down and broke the support, right? Then it means it was broken by what? By the resistance. What do I mean by that? I mean, this move that went down and broke the support, it started at the resistance. That's why when the thing goes down and it breaks the support, you need to remove the support from your chart. It does not exist, and add this. So you basically take the same rectangle that you had there on your support, you just move it up and put it there at the resistance, because the resistance now is the only area that is significant. Remember, we are marking the zone above and the zone below, and then now you need to search for the new zone below. You need to go down and look for new support. So that this one here is this question where you say, is the support no longer valid? Yes, it is no longer valid. You remove it, you're going to search for the new support below the price. The trend line will also have to be readjusted. No, I'm assuming you are asking something like this, but no, the answer is no. Let me show you. I already see where you are going with this, but the answer is no. You are asking if we now need to bring the trend line here, readjust it like that. The answer is no. And that's simply because you need to understand this concept. It's not that difficult, because remember, for us to bring the trend line here, or for us, remember when you're drawing bullish trend line, we are connecting the lows, right? For us to bring a trend line to the new low, that new low we must make sure that we must wait for that new low to give us a new high first. Then that's when we can bring it here. The same way in this case, let's use this one, but I'm not sure if you'll be able to see it. The same way, this is the low, the recent low that we use for our trend line. Why? Because this low, it went up and gave us a new high, higher than that. Ivan. So that will remain the recent low on our chart until this price goes up and give us a new high. Then that's when you can adjust it to this low. But for as long as we don't get a new high from that low that you want to involve, we're not going to involve it on our trend line. We can only adjust it when we're having a new low. I always tell you, look at it this way. Only think about getting adjusting your trend line when you get new low. Maybe when you are bearish, or when you have a new high, when you're bullish. So when the structure is bullish, the only time I can adjust my bullish trend line is if I have a new high. And when I'm bearish, the only time I can adjust my trend line is if I get a new low. Look at it that way. So, but here you confused your statement here. The first part, because remember, you must also bring in the concept of in this very same case, you must also bring in the concept of what? The concept of trend, or the market structure. What do I mean by that? Remember, okay, let me remove some of the stuff so that you can understand where I'm going with this, because I'm trying to show you something here. You need to understand that when a trend line is broken, what does that mean? So the first time when you said we break the trend line, what does that mean? And then you have to make a note on your thing. You say trend line broken, so which means consolidation, which means we are no longer, the bullishness is no longer that strong. We are now in consolidation. And then if the price goes down and breaks support, it means now we're going to downtrend. So these are the things that you need to take note of them as you're going down. You say the price went down and it broke the support as well. So you remember, now we were going up nicely and then we break the trend line and we broke two key structures of a bullish move. Then now we are going to downtrend. So it means when all of that happens, then you just, like I already told you, you just mark the resistance that broke all of that. And should the price give you a rally, in your head you're looking to sell from this, because you are now bearish. So you just identify a nice area of resistance and look to sell from that. But we're not what you did here when you're talking about rallying, you're trying to say this candlestick goes up and closes there, so that I now decide whether I can adjust my trend line. But no, we're not going to adjust the trend line. Why? Because we broke the support and we broke the trend line, which means we are bearish. So when the price, if it rallies, then yeah, remember, we are waiting to sell from there. Then now the only time you can adjust your trend line is if when we are selling, if our sell fails, or if we don't get the reason to sell and the price goes higher than that, it means what? We have a new high. That's a new alert. We have a new high. So this has to be part of the trend line. We have a new high, meaning that's the only time you can put your trend line there, because we have a new high. So now we have moved from being, we were downtrend, but we didn't have how can I put this? We didn't have a chance to put the bearish trend line. Or maybe sometimes you'll get it. You'll see the price when it was coming down. You'll see it doing, maybe it paused there before breaking the trend line. Then you can say you had a bearish trend line which was broken and even broke the resistance, blah blah blah. But if you don't get that, then it means when you're getting the rally, you're trying to sell because you're bearish. But rather than, instead of us getting that bearishness move, the price goes up and invalidates all of that, we are no longer going down, because of what? The bullish structure has overturned the overall or the whole move that the bears had. Because remember, the only structure that the bears had was from this to this. This is what gave us the downtrend. But now the bulls managed to remove even the root or the origin of that move. So it means the downtrend or the bearishness or is no longer there. So that's when you be like, okay, now it means because we went above that, then let me bring my trend line there, and then I can continue buying the same way we were buying when we were doing this, because we stopped buying the day we broke the trend line and broke the support. But now all of that is back. We can continue buying. I hope it makes sense, my guy. I hope it makes sense. But you mustn't confuse yourself. You mustn't confuse yourself. Try and keep it as simple as possible. So when you're saying, like when you are reading through your statement, just highlight the key points, which is what we're breaking bullish trend, right? And then which means, what does that mean? Then you'll be like, oh, it means consolidation. We are no longer bullish. We are now in consolidation. And then you go up and breaks the support, passes the support or breaks the support, which means we are now going to downtrend. So these are the things that you should do every time you know, if you can come up with a statement like this, then surely you should be able to interpret it like I'm doing now. And then you go up and pass the same trend line there. I said it doesn't make sense. So is the support still active? No, it is not. The moment you go lower than it, you're gonna be like, support doesn't exist anymore, which means the characteristic of that support was taken by what? The new resistance, which is the resistance that gave us the move and broke the support. So this is the one that is active or valid, because you're talking about validity. The only valid zone now we have is this one. So because remember, when you're trading, we always mark the zone above and the zone below. You're going to stop focusing on this one. It does not exist anymore. Go down and look for the next support, so that you always have area above and area below, and the price is still in between. However, so in terms of validity, the only valid one you have is the resistance. So this is how you'll be interpreting your thing, how you'll be interpreting your stuff. And then having to, so this is the valid, so this is also a key point. And then here said the trend line will have to be readjusted. Then no, you'll be like, no, not until we have a new high. That's the only time you can readjust it. Okay, I'm gonna end it there, my guy. I hope you are answered. You shouldn't confuse yourself. These concepts must they must connect, especially this one. This is a very, very, very key concept. Market structure. Or okay, sorry about that. Or the trend. It's also called what? The trend. So it's very important. So when you break one structure, what does that mean? Does it mean I'm still in the same trend, or now I'm going to a different trend, or what? So it's very much important for you to understand this. Every time you're saying we broke the trend line, then you need to know that the market structure has changed. We are no longer going the same trend. It's either we're going to consolidation or something else. Yeah, it's very important. So I hope you answered, my guy, and you should bring more questions like this, so that when I'm answering them, then I can just make it public for everyone to see, so that it will help with other people as well. So that's why I encourage all of you guys to ask questions, because when you do, at least we will be able to clear any confusion that you may have. So I'm glad this guy brought this up, so that we can have a discussion. And I hope I've clarified things as I possibly could, and it should make sense now. And I see this guy is very, very active. He's one of the active guys, most active guys on this channel. This guy. And I'm telling you, few months from now, is going to be a monster, but I'm saying that in a good way. A market monster, if I can put it like that, because he's very active. I see him on each and every video that I post, and is asking questions if he doesn't understand, or if there's something that maybe went above his head, if he needs more clarity on. So yeah, I think you guys should also do the same thing, because that's the only way you're going to learn. That's the only way you're going to learn. There's no such thing as a stupid question. So every time I discuss something, I talk of, maybe for instance today I mentioned the market structure, and you feel like you are not very familiar with the market structure, or how you tell the trend is changing, this, that, you can always bring it in the comment section. Then we will tackle it together. Everyone. All right, but for now, this one I'm gonna end it here, and then I'll see you all in the next video. All right, sharp, sharp.